You're watching Silver News Daily. Subscribe for more.
What if I told you the silver market is on the brink of a catastrophic meltdown? Right now, something unprecedented is happening. Massive silver withdrawals from COMEX vaults, far beyond anything we've seen before. Billionaires, institutions, and even central banks are making quiet but alarming moves, pulling silver out at record-breaking levels. Is this just a coincidence, or is it the first sign of an impending COMEX default, one that could send shockwaves through the entire financial system? The cracks are already showing. For 5 straight years, global silver demand has outpaced supply, creating a deficit so severe that experts warn the system simply can't hold much longer. And yet, despite this looming crisis, silver prices remain mysteriously low. Could this be a deliberate effort to keep the public in the dark, while the elites hoard as much physical silver as possible? Today, we're breaking down exactly what's happening behind the scenes. We'll expose the hidden forces draining the COMEX vaults, the dangerous imbalance in the silver market, and the alarming signals that suggest a total collapse could be closer than anyone realizes. Trust me, you do not want to miss this. Let's dive in.
We don't actually know the answer to this. I mean, what we do know is that the media, presumably tipped off by bullion banks in the LBMA, whatever, have said that the reason that gold is running up and you've got these huge, great premiums on futures relative to spot is because Trump might bring in 10% tariffs or 25% tariffs against Canada and Mexico and so on. So there's going to be a shortage of bullion. Now, I don't actually buy that story. I can see some people maybe going into the market and thinking, oh my goodness, we better go and buy some futures to get hold of some gold before this comes in. But I would have thought that actually they're in a minority. Now, that said, I think that it could have triggered something else. And to me, that other thing is probably, and I don't know for certain, but it seems to me this is the most likely candidate, probably the increased pace of stand for deliveries on COMEX. The level has actually been very, very high. And I think, we have to bear in mind that the whole point about futures is that, they're not meant to end up in delivery. Futures are a credit market, nothing to do with bullion. I mean, okay, if you've got lots and lots of positions, particularly short positions, then it makes sense, if you like, to have some bullion in the background. So you've got some sort of reserves, etc., etc. But basically, this is a credit market. It is not a physical bullion market. The problem is that for the last, is really since COVID, I think, certainly 2021, I noticed that these stands for deliveries, in other words, people deciding to go for physical settlement rather than closing out an expiring future, these physical demands, as it were, which are known as a stand for delivery, have been increasing and increasing and increasing. So I thought, well, let's have a look and see what the extent of it is. And what I found was that in 2021, we had 602.7 tons of gold stood for delivery. That was actually probably the highest, and that was in the wake of the COVID problem. So really between 21, 22, 23, and 24, there's 4 years. The total amount of gold bullion stood for delivery was 2,113.9 tons. That is an awful lot of gold. And if you look at the silver numbers, the figure there is 25,122 tons. Again, a very, very considerable.
The COMEX is the heart of the global silver trade. At least that's what most people believe. It's where silver futures contracts are bought and sold, where major institutions hedge their bets, and where investors think they can secure physical silver. But what if I told you that COMEX might not have nearly as much silver as it claims? See, there are 2 types of silver in the COMEX system: paper silver and physical silver. Paper silver is just a contract, a digital promise that you own silver. But here's the problem. For every 1 ounce of physical silver in COMEX vaults, there are potentially hundreds of ounces in paper claims. Now, in a stable market, this doesn't matter. Most traders don't actually want to take delivery of silver. They just buy and sell contracts for profit. But when things get shaky, when investors start losing trust in the system, those paper claims can turn into a massive problem. Because if even a fraction of investors suddenly demand their actual silver, COMEX could be exposed as woefully underprepared to deliver. And guess what? That's exactly what we're seeing right now. More and more investors are standing for physical delivery, taking their silver out of COMEX vaults instead of just rolling their contracts forward. In other words, they don't trust the system anymore. But why now? What's driving this surge in demand for physical silver? The answer lies in something far bigger than just COMEX. Global silver inventories are drying up, and industrial demand is skyrocketing. The supply-demand equation is breaking down, and the very foundation of the silver market is starting to crack. And if COMEX is already struggling to meet delivery requests now, what happens when the real panic starts? Stick with me, because next we're diving into the numbers. Why the world is running out of silver faster than anyone expected, and what this could mean for the future of the entire financial system. Trust me, you won't believe what's coming next.
Considerable sum. Since the end of last year, in other words, just going through January and the first few days of February, we've had an acceleration in the rate of stands for deliveries of gold. And that, I think, probably helps explain where the panic is. The reason this is important is that when it comes to getting delivery out of COMEX vaults, it's actually very, very difficult to do so. It's a long, protracted process. And not only that, but literally today or yesterday, there was a man who used to work for Sprott was describing what happened when they tried to stand for delivery for silver. And what was meant to be a 5-day settlement actually turned out to be a 9-month hassle with, excuses and excuses and excuses. And, and at one stage they asked for a bar list and nothing came and so on. So it was quite clear that this credit market, was not really in the business of delivering anything. So now that we have, as I said, by the end of December, the last 4 years, over 2,000 tons of gold stood for delivery. The question is, how much of that has actually been delivered? Now, the experience of Sprott trying to get hold of its silver rather suggests that there is a hell of a backlog of physical which is being stood for delivery. Now, let's sort of it has accelerated in the last, in this year. This year so far, it's been running at a rate of over 2,200 tons for this year. This is, if the current level continues. So this acceleration, I think, is probably the straw that is breaking the camel's back, as it were. Now, let's put that to one side and look at it from the point of view of the people who are standing for delivery. We don't know who they are, but I think it's a reasonable guess to suggest that the majority of them have actually taken out their futures positions and have stood for delivery against those through the Globex facility, which, if you like, is the 24-hour facility outside, outside New York. So you've got all these foreigners who've got this stuff stuck in a COMEX warehouse, and they are now agitating to get their stuff out. Why? Because Trump has been elected. They are very concerned about Trump. They're concerned about the future of the dollar. They want physical possession.
The COMEX is the heart of the global silver trade. At least that's what most people believe. It's where silver futures contracts are bought and sold, where major institutions hedge their bets, and where investors think they can secure physical silver. But what if I told you that COMEX might not have nearly as much silver as it claims? See, there are two types of silver in the COMEX system: paper silver and physical silver. Paper silver is just a contract, a digital promise that you own silver. But here's the problem. For every 1 ounce of physical silver in COMEX vaults, there are potentially hundreds of ounces in paper claims. Now, in a stable market, this doesn't matter. Most traders don't actually want to take delivery of silver. They just buy and sell contracts for profit. But when things get shaky, when investors start losing trust in the system, those paper claims can turn into a massive problem. Because if even a fraction of investors suddenly demand their actual silver, COMEX could be exposed as woefully underprepared to deliver. And guess what? That's exactly what we're seeing right now. More and more investors are standing for physical delivery, taking their silver out of COMEX vaults instead of just rolling their contracts forward. In other words, they don't trust the system anymore. But why now? What's driving this surge in demand for physical silver? The answer lies in something far bigger than just COMEX. Global silver inventories are drying up, and industrial demand is skyrocketing. The supply-demand equation is breaking down, and the very foundation of the silver market is starting to crack. And if COMEX is already struggling to meet delivery requests now, what happens when the real panic starts? Stick with me, because next we're diving into the numbers. Why the world is running out of silver faster than anyone expected, and what this could mean for the future of the entire financial system. Trust me, you won't believe what's coming next.
Yeah, that's right. I mean, we've been talking about this, in the various interviews that we've done together for some considerable time, and I think where we are is that there is a broadening realization that possession actually is very important. I think as far as the global south was concerned, the first inkling that this was actually very important came from when the American NATO attempt to cut off Russia from Western financial markets by stealing, and there's no other word for it, and I don't apologize for using this word, by stealing Russia's bank reserves, alerted everybody to this. And in the St. Petersburg Economic Forum of 2022, this was something that Putin, majored on in his speech, and that was attended, I think, by over 80 nations. And something like 14,000 representatives or something. I mean, this was a very well attended event, and the message was absolutely clear. And he said, you don't want to hold dollars, you don't want to hold euros, and if you've got any gold stored in the Western vaults, then get it out. So, and I think that message is trickling down. And of course, the problem, I think, in, sort of, if you like, in bullion markets generally, is that the really big boys, central banks and sovereign wealth funds and all the rest of it, are preempting gold before it even gets to the market. So the market is kept short of fresh supplies. The only stuff that really comes into the market, I guess, is sort of from friendly sources. But I mean, China's out, Russia's out, various other nations, I think, in the middle of it.
If you thought the silver deficit was bad, wait until you see what's happening inside the COMEX vaults. Right now, we are witnessing one of the largest silver withdrawals in modern history, and nobody in the mainstream media is talking about it. Over the past few months, COMEX has seen record-breaking delivery requests with investors demanding actual physical silver instead of rolling over their contracts. Normally, most futures traders settle in cash, but this time something is different. More people than ever are saying, I don't want paper silver, I want the real thing. Why? Because trust in the system is collapsing. Let's break this down. COMEX operates on a fractional reserve system, meaning it doesn't have enough physical silver to cover all outstanding paper contracts. As long as most traders never demand delivery, the system runs smoothly. But now the cracks are showing. Investors who should be comfortable holding paper silver are rushing to pull actual bars out of vaults. Just last month, millions of ounces of silver were withdrawn from COMEX storage, an event so massive it's raising alarms among insiders. If this trend continues, it could reach a point where COMEX simply does not have enough silver left to fulfill delivery demands. And if that happens, a default, a true silver crisis, and a price explosion unlike anything we've ever seen before. But here's what makes this even more alarming. This isn't just happening on COMEX. London's silver market, the LBMA, is also seeing its reserves drained at an unprecedented rate. Reports indicate that the amount of silver available for immediate delivery is dangerously low, with long wait times and delays piling up. At the Bank of England, withdrawal queues have stretched from the usual few days to a shocking 4-8 weeks. And get this, even silver stored in bonded warehouses in India is being pulled back into COMEX. That's right, silver that was meant for the private market is now being redirected into the futures exchange, suggesting that COMEX is desperate to maintain appearances and prevent a full-blown panic. So here's the question. Who is withdrawing all this silver? Is it just everyday investors trying to protect themselves? Or is it something far bigger, something coordinated? Because if history has taught us anything, it's that when the wealthiest individuals in the world start hoarding hard assets, something huge is about to go down. And that's exactly what we'll uncover next. Because right now, global elites are quietly securing their silver holdings at an unprecedented pace. What do they know that we don't? Let's find out.
I mean, the Americans, I mean this most sincerely, as it were, the Americans are not to be trusted as far as the foreigners are concerned. We've had in the past gold confiscation. You just don't trust anything that the Americans say, particularly if you're a Chinese, if you're Russian, if you're, in the global South, BRICS, and so on and so forth, which I would guess quite a lot of these stands for delivery are. So I think that's what's happened. We've got a panic, and this is why they're flying in huge quantities of gold from London, and they've tapped out the London bullion market, and so much so that there's now a 4 to 8 week queue at the Bank of England to withdraw presumably leased gold from the Bank of England. So you can see that there's a real panic on here. And then this morning, Reuters reported, or it might have been overnight, reported that gold has actually been coming out of bonds, as it were. The customs houses in India. Now, this is gold which has not, if you like, cleared through into the domestic market. What happens is that the big consumers of gold will buy bullion, store it, as it were, in a bonded warehouse, under the sort of customs arrangements, not paying tax on it until they have to, when they then import it into the domestic market. Even they, apparently, have been sending gold back into COMEX. So you can see that there's a huge shortage of physical gold, presumably because these stands for delivery are now coming home to roost. And that roughly, I think, is where we are. Of course, the other thing to bear in mind is that while the crisis, I think, is in gold, very, very definitely, if you look at the way it's accelerated, the stands for delivery have accelerated in the first month and 2 days of this year. You can see why that's triggered an enormous panic. But, gold you can move relatively quickly. That is assuming that you can get it out of the warehouse, which is the other problem. As I said, the Bank of England is taking 4 to 8 weeks, according to the Financial Times, in order to release gold to lessees or, an entity which might actually own it. I think with silver, it's a different problem because you can't really air freight silver. I mean, we're looking at, the last 4 years, something like 25,000 tons has stood for delivery. Now, I mean, you can't put that on an aeroplane. That has to be shipped. So you've got an additional factor, I think, when it comes to silver. And I don't think that's quite reflected in the silver price yet. Silver's beginning to move a bit, but you can see that this is, I think, in a nutshell, where we are with this, Dunnigan, is I think that we are in the early stages of potentially of a systemic crisis in these markets, in the bullion markets.
If the world's richest and most powerful people are making a move, you'd better believe they know something the rest of us don't. And right now, they're hoarding silver like never before. But here's the question. Why? We're talking about central banks, sovereign wealth funds, and ultra-wealthy individuals, people with access to insider information that never makes it to the public. These elites aren't just buying silver futures or ETFs. They're demanding actual physical silver and pulling it out of the system completely. And they're doing it quietly. Recent reports show that massive amounts of silver are being withdrawn from COMEX and LBMA vaults at an unprecedented rate. Billionaires, major financial institutions, and even certain governments have been aggressively acquiring silver bars, and not just for investment, but for protection. Protection from what exactly? Let's connect the dots. 1. Fears of a financial meltdown. Some of the biggest names in finance, Ray Dalio, Stanley Druckenmiller, and even JP Morgan, have all warned that the global economy is on shaky ground. Record high debt, banking instability, and rising inflation have made cash and bonds less attractive as safe havens. And when fiat currencies lose value, the ultra-wealthy turn to hard assets like gold and silver. 2. Central banks. Making strategic moves. Central banks have been aggressively buying gold over the past few years, but now, for the first time in modern history, they're starting to accumulate silver too. Russia, for example, recently announced plans to add over $500 million worth of silver to its reserves. This is significant because central banks never openly held silver before. 3. Industrial demand. Pushing silver into scarcity. Unlike gold, silver has critical industrial uses. The automotive and tech industries rely on silver for electric vehicles, AI computing, and solar panels. With demand at all-time highs, major corporations and governments are racing to secure their supply chains before a crisis emerges. 4. Silver's role in a potential new monetary system. Many experts believe the current global financial system is unsustainable. There's growing speculation that a future currency reset, possibly led by BRICS nations, could involve gold and silver-backed currencies. If that happens, demand for physical silver will explode. Could the elites be positioning themselves for this shift? The bottom line? The people with real wealth and power are quietly preparing for something big. They aren't waiting for headlines to confirm a silver shortage or a monetary crisis. They're acting now while prices are still artificially low. But here's the scary part. If silver is disappearing from the market at this rate, how long before the average investor is completely locked out? And more importantly, who is keeping silver prices suppressed while the rich accumulate? That's what we're exposing next, because if what we suspect is true, the entire silver market may be one of the most manipulated financial systems in history.
Yeah. Yes, it is extraordinary that here we are with gold shooting into new high ground, and the amount of interest in, if you like, the Western alliance amongst the people is virtually zero. It is extraordinary. The interest is all in Asia and associated nations, let's put it that way. I think that part of the problem is that nobody actually understands money. They don't understand that everything is credit other than gold. And we've had 50 years of propaganda from the US Treasury saying that gold is no longer part of the monetary system and the dollar is now money, which is pure propaganda. But people tend to believe it. So it's a long, hard battle getting people to understand what is actually going on. You've got the debasement of the currency. To give you an idea of how bad it is in the UK, bear in mind that in 1932, before the second attempt at a gold standard was abandoned, one gold sovereign coin was worth £1, and you could exchange it at the Bank of England for £1. So you take your £1 note and you exchange it at the Bank of England for one sovereign. And you could do that on demand. That was the whole point about the gold standard. So that was 1932. Today, the value of a sovereign is over £540. That gives you an idea about the debasement of sterling credit over the last 90 years. Now, it's a process which is now accelerating. So, and this is an important point. People think, okay, we see prices rising and all the rest of it. Inflation's what? CPI is what, 2.3% or something. I mean, for a start, you can't measure the debasement of a currency that way. The only way you can measure the debasement of a currency is by comparing it with real money, which of course is gold. And we've seen in 2024, we've seen that the purchasing power of the dollar, measured in real money, which is gold, has declined by over 25%. That is an acceleration on the previous year. What we're now seeing, I think, potentially, is a crisis in Western markets whereby the credit system has entered into gold commitments which it cannot deliver. And what that means is that the value of the dollar, the purchasing power of the dollar, is going to decline even more rapidly because people will want out of the dollar and into real money. And then there's a further problem, because as soon as people start really doing that in earnest, you've got all the debt that needs to be rolled over and nobody to buy it. So what happens to the value of that debt? Well, it goes down. In other words, the yield rises. And we are likely to see the yield on the 10-year US Treasury rise through 5% quite quickly. And I suspect it'll be on its way to 10% before very, very long. Now, don't ask me for a
If silver is in such high demand, if vaults are being drained, if global elites are hoarding it, then why aren't silver prices skyrocketing? The answer? Because the game is rigged. For years, major banks and financial institutions have been accused of suppressing silver prices through paper manipulation. This isn't some wild conspiracy theory, it's been proven in court. Take JP Morgan, for example, and in 2020, the bank was fined $920 million for manipulating the silver and gold markets. That's nearly $1 billion in penalties for rigging prices through spoofing, placing massive fake orders to create artificial price movements. And here's the kicker. That was just the fine. Imagine how much they actually made from their manipulation before getting caught. And yet, even after this record-breaking scandal, the same shady tactics are still happening today. Here's how they do it. 1. The paper silver scam. Most silver trading isn't done with actual silver, it's done with paper silver. Banks flood the market with contracts that represent silver but aren't backed by physical metal. This artificially inflates supply and keeps prices lower than they should be. But as we've already seen, when investors start demanding real silver, the system cracks. 2. Naked short. Selling banks and institutions place massive short positions on silver, betting that prices will go down. This suppresses momentum and discourages retail investors from buying in. It's financial warfare designed to keep the masses away from real wealth while the elites stock up. 3. Sudden price smashes. Ever noticed how silver prices mysteriously plummet right when demand starts rising? This isn't a coincidence. Large players dump huge amounts of paper silver onto the market in seconds, triggering stop-loss orders and scaring investors into selling. The price crashes, big players buy back in at lower levels, and the cycle repeats. 4. Government and central bank influence. Some believe silver suppression isn't just about profit, it's about control. If silver were allowed to rise to its true market value, it would expose the weakness of the US dollar and fiat currencies worldwide. A soaring silver price signals inflation, instability, and a loss of faith in paper money. And central banks can't allow that to happen. But here's where things get interesting. Despite all these manipulations, cracks in the system are starting to show. Recent trading patterns suggest that major players are losing control. Silver has been testing multi-year highs, and demand for physical delivery is putting pressure on these rigged markets. If institutions can't hold prices down forever, we could be on the verge of a massive breakout. So what happens when silver manipulation finally collapses? That's what we're covering next. Because if the paper silver scam is truly unraveling, the COMEX could be headed toward the biggest default in history. And when that happens, prices won't just rise, they'll explode.
Are also out. So you've probably got about, I don't know, almost half the world's gold mine output not reaching the markets at all. And as for the rest, I mean, what do you do? I mean, if you're really looking to pick up decent slugs of bullion, I think what you do is you just get into the queue at the refiners. I'd say, let me have what you can when you can. And I think that's basically, it's happening to a greater and greater extent. And of course, it's driven the spot price up. I mean, as we speak today, we're looking at 2,840. And you've then got this problem on the top that the credit markets, by which I mean forwards and futures, over the counter and regulated futures. Those are pure credit markets, and they haven't, the bullion banks and all the rest of it haven't actually got their ducks in a row for such a move in gold. Interestingly, I think it was yesterday, there was actually on a rise in the price of gold, the dollar price of gold. There's actually a fall in the number of outstanding contracts on COMEX. In other words, it was rising despite what we would normally regard as managed money and other bulls liquidating their positions. So what? This is actually, I think it is actually quite a serious move. And I think the point I would like to make is that the idea that you can sort of say, well, it's moved so far and it's bound to get a reaction and all the rest of it, and all that reasonable sort of analysis, I think counts for absolutely naught.
If you think the silver shortage is just a COMEX problem, think again. The crisis is global. Right now, the London Bullion Market, LBMA, one of the world's largest hubs for gold and silver trading, is facing an unprecedented strain. The vaults that were once thought to hold an endless supply of precious metals are running dangerously low, and delivery times are stretching far beyond normal limits. Let's break this down. The London liquidity crisis. For years, the LBMA has operated as the center of the global bullion trade. It functions much like COMEX, offering a marketplace where institutions, central banks, and wealthy investors buy and sell gold and silver. But just like COMEX, most of these transactions don't involve actual metal. They rely on paper claims instead. The problem? Those paper claims are only as good as the vaults backing them. And right now, the numbers don't add up. In December 2024, LBMA data showed 279 million ounces of silver stored in London vaults. But here's the catch. Only 36 million ounces were available for immediate delivery. That means nearly 90% of the silver in London is already spoken for, either pledged to ETFs, central banks, or other institutions. And things are getting worse. Delivery delays are now stretching to 4 or 8 weeks, compared to the usual 2-3 days. That might not sound like a big deal, until you realize that these contracts are supposed to guarantee instant settlement. The delays are a major red flag that LBMA vaults are running critically low. Why is London's silver disappearing? There are two major forces draining the London market. COMEX is raiding London's vaults. With COMEX struggling to meet physical silver deliveries, massive amounts of metal are being shipped from London to US vaults. In just 2 months, over 12.2 million ounces of gold and silver have been transferred to COMEX storage, an unheard of amount. This suggests that COMEX is scrambling to cover its own shortages, pulling metal from anywhere it can find. Elites are pulling their silver out. The wealthiest investors and institutions are withdrawing silver directly from LBMA vaults. This isn't just about investment, it's about control. If you own physical silver in your name, no one can take it from you. But if your silver is held in a paper system, good luck getting it when the crisis hits. Are we facing a London default? Let's be clear. The moment London vaults run out of deliverable silver, the entire system collapses. If institutions can't fulfill their contracts, trust in the paper silver market evaporates. At that point, we could see a historic short squeeze where silver prices skyrocket as investors panic buy whatever physical metal is left. A rush for real silver, forcing banks and ETFs to reveal how little physical metal they actually own. A complete breakdown of the paper silver system, leaving only physical holders with real wealth. And here's the most important part. We are dangerously close to this happening. This isn't just speculation, it's happening right now. COMEX and LBMA are both bleeding silver, and investors who wait too long to secure physical metal could be completely shut out of the market. So the question is, what's the final trigger? What event could push the system over the edge and expose the truth? Well, there's one major geopolitical event that could accelerate everything, and it's happening sooner than you think. Next, we're diving into how Trump's expected trade policies could ignite the biggest silver squeeze in history.
Maybe even going over $3,000 in the not-too-distant future, there's going to be a wake-up call for people who don't have gold, don't have mining stocks, and thinking, what do we, we better, equities are tanking, it's not doing terribly well. My goodness, what do we do with our portfolios? And I think you'll find that investment managers will rebalance, by which I mean they will sell down the momentum stocks and they will look for value elsewhere. And there's one sector which is absolutely screaming out value, and that's the mining sector. And I think that's where they will go. But they've got to be they've got to be scared into selling, the momentum stocks first. And incidentally, I've run charts in the past comparing Bitcoin with Nasdaq. There's absolutely no doubt at all that it's the same cohort in both markets. And when Nasdaq crashes. I mean, I remember was it in what they call the Great Financial Crisis, which will be minor compared to the one which is potentially ahead of us. I remember how Nasdaq really plummeted. I mean, I can't remember what it was, top to bottom, but I mean, you look at sort of it's 80% or something like that. I mean, if that happens again, and it will happen again, and I think it'll be more than 80%, where's your Bitcoin gone? And again, I think that a lot of people have gone into cryptocurrencies as an alternative to gold, and they're going to get a very, very nasty shock. It's just totally the wrong thing to do. I mean, okay, if they banked some, if they banked some of their crypto gains and moved it into gold, I mean, well done them. But most of them will go to bed with this one. They'll lose a lot, basically.
We've already established that the silver market is in serious trouble. Vaults are being drained, demand is at all-time highs, and major institutions are scrambling to get their hands on physical metal. But now there's a new wildcard in play. One that could send the silver squeeze into overdrive: Donald Trump's anticipated trade policies. Here's what you need to know. The Trump tariff effect on silver. As Trump gears up for his second term, one of his key economic promises is massive tariffs on foreign goods. He's already hinted at placing universal import tariffs on countries like China, Mexico, and Canada. And guess what? Silver is a globally traded commodity. If Trump slaps tariffs on industrial metals, it could disrupt supply chains in a way we've never seen before. How tariffs could ignite a silver shortage: higher costs for imported silver. The U.S. imports millions of ounces of silver each year from Mexico, Canada, and Peru, the top 3 silver-producing nations. If tariffs are introduced, silver coming into the U.S. would instantly become more expensive. This could push manufacturers to hoard silver before tariffs kick in, tightening supply even further. Disruptions to the mining industry. Mining companies rely on international trade for equipment, refining, and exports. A tariff war could slow down operations, making silver production even more constrained than it already is. We've already seen disruptions from government interventions. Mexico, for example, recently tightened mining regulations, impacting about 5% of projected 2024 silver output. If tariffs hit, the effects could be even worse. The U.S. could be forced to increase domestic silver reserves, With global supply chains under pressure, the U.S. government may have to stockpile silver, especially since it's a critical metal for defense, energy, and technology. If the government starts aggressively buying silver, it would directly compete with investors and industries, driving demand through the roof. Trump's policies could fuel a COMEX panic. Now, let's tie this back to the COMEX crisis. If silver imports get more expensive, if global supply gets even tighter, if government demand for silver increases, what do you think happens to COMEX's already dwindling reserves? That's right. Investors will rush to secure their silver before it's too late. And this brings us to an even bigger issue. What if COMEX simply can't meet delivery requests anymore? What happens if, one day, a large investor demands silver and COMEX doesn't have it? We've seen this before with other commodities. In 1985, the tin market collapsed when the International Tin Council ran out of physical supply. The moment investors realized there was no tin left, prices crashed overnight and the entire market ceased to function. If the same thing happens to silver, the effects would be far more catastrophic. Silver is more than just a commodity. It's monetary metal. A breakdown in the silver market wouldn't just impact industrial users, it would shake the foundation of the global financial system. And this brings us to the next terrifying possibility. What happens when investors realize COMEX might be on the verge of default? In the next section, we break down exactly why COMEX is closer than ever to a historic failure, and what happens next could change the financial markets forever.
When you look at the futures, that's, you've got a central counterparty in the form of COMEX. Is COMEX going to survive this? Well, this is, I think, it's a force majeure, maybe in prospect, if this really does deteriorate. And this is where David Webb's book, The Great Taking, comes in, because what happens? I mean, the Great Taking is taking what you think you own in terms of bonds and equities and all the rest of it, registered through a central counterparty, and that central counterparty taking that because they have a prior lien on it, as it were, from the issuers, direct with the issuers, they would take that and use it as collateral, basically, in the event of a market meltdown, credit collapse, whatever, however you like to describe it. Okay, they'll still owe it to you. But you may not quite like the idea of, say, your gold ETF being taken from you and deployed for other things without your permission. I mean, the fact is you don't own it. And not only do you not own it, but also the central counterparty doesn't own it. But they've got a piece of paper that says they can use it as collateral. That is basically where we are. And I think this crisis is really beginning to hot up. I do see higher interest rates as a result of the credit bubble deflating. That will take down capital markets big time. And getting back to what you were saying about, why people just don't understand, the gold is money and all the rest of it. I mean, you look at the mining sector, and the big brokers have spent nothing on researching mines at all. I mean, to them, it's been a dead duck for so long. They've been chasing, cryptos and, NASDAQ stocks and all the rest of it. That's where their research effort really is. Not the research in high tech counts for very much, because that's all momentum stuff rather than value stuff. But you can see that that with nobody really covering the mining stocks, that is why there is so little interest in the mining stocks. That is obviously going to change, and I suspect that with gold going over $2,800, and I think
we've already established that the silver market is in serious trouble. Vaults are being drained, demand is at all-time highs, and major institutions are scrambling to get their hands on physical metal. But now there's a new wildcard in play, one that could send the silver squeeze into overdrive: Donald Trump's anticipated trade policies. Here's what you need to know: the Trump tariff effect on silver. As Trump gears up for his second term, one of his key economic promises is massive tariffs on foreign goods. He's already hinted at placing universal import tariffs on countries like China, Mexico, and Canada. And guess what? Silver is a globally traded commodity. If Trump slaps tariffs on industrial metals, it could disrupt supply chains in a way we've never seen before. How tariffs could ignite a silver shortage, higher costs for imported silver. The U.S. imports millions of ounces of silver each year from Mexico, Canada, and Peru, the top 3 silver-producing nations. If tariffs are introduced, silver coming into the U.S. would instantly become more expensive. This could push manufacturers to hoard silver before tariffs kick in, tightening supply even further. Disruptions to the mining industry. Mining companies rely on international trade for equipment, refining, and exports. A tariff war could slow down operations, making silver production even more constrained than it already is. We've already seen disruptions from government interventions. Mexico, for example, recently tightened mining regulations, impacting about 5% of projected 2024 silver output. If tariffs hit, the effects could be even worse. The U.S. could be forced to increase domestic silver reserves. With global supply chains under pressure, the U.S. government may have to stockpile silver, especially since it's a critical metal for defense, energy, and technology. If the government starts aggressively buying silver, it would directly compete with investors and industries, driving demand through the roof. Trump's policies could fuel a COMEX panic. Now, let's tie this back to the COMEX crisis. If silver imports get more expensive, if global supply gets even tighter, if government demand for silver increases, what do you think happens to COMEX's already dwindling reserves? That's right. Investors will rush to secure their silver before it's too late. And this brings us to an even bigger issue. What if COMEX simply can't meet delivery requests anymore? What happens if, one day, a large investor demands silver and COMEX doesn't have it? We've seen this before with other commodities. In 1985, the tin market collapsed when the International Tin Council ran out of physical supply. The moment investors realized there was no tin left, prices crashed overnight and the entire market ceased to function. If the same thing happens to silver, the effects would be far more catastrophic. Silver is more than just a commodity. It's monetary metal. A breakdown in the silver market wouldn't just impact industrial users, it would shake the foundation of the global financial system. And this brings us to the next terrifying possibility. What happens when investors realize COMEX might be on the verge of default? In the next section, we break down exactly why COMEX is closer than ever to a historic failure, and what happens next could change the financial markets forever.
Time frame on that. But I think the point worth noting is that when it gets through 5%, or if it approaches 5%, and we're, 4.6% at the moment, then you're going to see an equity market crash develop. Why? Because we are in the biggest credit bubble seen in history. That is a consequence of going off a gold standard and not allowing successive bubbles to actually properly deflate, wipe out bad credit, bad debts, and all the rest of it, debt being the other side of credit, but just postponing it. Do you remember when we used to say they were kicking the can down the road? We're not saying that anymore because we can't kick it down the road any further. It's not a phrase which is in common use now. It's not an option. So with that in mind, what happens to credit? Well, when it starts collapsing, there's nothing the Fed or anyone else can do anything about it because this bubble is now a tsunami going to break on all our shores. It's a dollar-based bubble, and the election of Donald Trump, while in many ways I would very much support him, I think has exposed a horrid ignorance at the highest levels, and I mean presidential levels, about what money is, particularly with him backing cryptocurrencies. I mean, he's got no idea at all about that, or indeed economics. He's getting into trade wars. Now, okay, people are saying that, Donald Trump was using this as a negotiating tactic against, the Mexicans and the Canadians, and that's rather how he's putting it. But actually what he wants to do is he wants to replace income and corporation taxes with tariffs. So the idea that this is, he's going to back off and all the rest of it, forget it. I mean, he might back off from extreme positions, but he's going to want his pound of flesh through tariffs. And we're talking about a world which is very interlinked through supply chains and everything else, including, just British industry. Apple, a very, very good example. I bought a new iPad the other day, made in China, designed in California, but made in China. How's that going to work out? And in the past, of course, a lot of American industry has ducked this by moving production or assembly or whatever into Mexico. And of course, Mexico is now, in Trump's sights. So, he is going to destroy the global economy. That's what it boils down to. So if you're sitting here and you're analyzing this from outside, and particularly if you're not sympathetic to Trump, which most foreigners are not, you will think, I don't want dollars, I want gold, I want real money. And that's why there is now a run on the system. And because gold is real money and all the rest is credit, this is extremely dangerous as far as the mountain of credit is concerned. And a lot of that mountain is in derivatives. We're talking about hundreds of trillions of positions with counterparty risk in there, which, certainly in the over-the-counter derivatives, it's counterparty to counterparty.
We've followed the trail of breadcrumbs, COMEX vaults being drained, global elites hoarding silver, manipulated prices keeping the public distracted, and geopolitical chaos accelerating the crisis. Now, we've arrived at the final stage. What happens when the silver market finally breaks? Here's the reality. The COMEX default is no longer a question of if, it's a question of when. How the silver apocalypse unfolds. Step 1. COMEX fails to deliver a major player, be it a billionaire, a hedge fund, or even a central bank, places a massive order for physical silver. COMEX delays the delivery, claiming logistical issues. But insiders know the truth. There's not enough silver left. Step 2. The truth hits the market. News spreads that COMEX cannot fulfill all delivery requests. Investors who were holding paper silver contracts panic, rushing to redeem their contracts for physical metal before it's too late. The price of silver starts surging as supply collapses. Step 3. The global silver shortage becomes official. The London Bullion Market Association, LBMA, follows suit. Delivery delays stretch from weeks to months. Silver refiners and miners refuse to sell at the current spot price, knowing that prices are about to skyrocket. The physical silver market breaks away from the manipulated paper price, leading to a massive decoupling. Step 4. Silver goes vertical, $100, $200, $500 per ounce. Once the public realizes that silver supply is collapsing, a full-blown mania begins. Retail investors, institutions, and even governments scramble to secure whatever silver is left. The price explodes past all-time highs, and the silver squeeze becomes unstoppable. Step 5. A monetary reset? With the silver market in total disarray, confidence in fiat currencies erodes. Countries with large silver and gold reserves, like China and Russia, begin floating the idea of a precious metals-backed currency. The U.S. government, seeing the dollar at risk, may be forced to acknowledge silver and gold as real money once again. The final warning: what should you do? At this point, the writing is on the wall. The silver market is not sustainable. The cracks are forming, and history shows that when supply collapses, prices don't rise slowly. They go parabolic. And once the panic starts, it will be too late to buy. So the biggest question is, are you prepared? Because the global elites are. They've been draining silver from the system for months. They know what's coming, and yet the average investor still doesn't see it. The bottom line? Silver is running out. And when the financial system finally wakes up to this reality, the price of silver won't just rise. It will explode. So ask yourself, Will you be holding real silver when the system breaks? Or will you be one of the millions scrambling to buy when there's nothing left? Time is running out. Make your move before the silver apocalypse hits. Final reminder. If you found this information valuable, make sure to subscribe for more updates on the silver market. We break down the biggest financial events before they hit the mainstream. What do you think? Will COMEX collapse in 2025? Where do you see silver prices heading? Drop your thoughts in the comments below. Disclaimer. This is not financial advice. Always do your own research before making investment decisions.
Absolutely. I mean, I think if I can carry on the point that you were making, the moms and pops will be sort of, I have no doubt, looking at gold through investment eyes, they will see that it's gone up and they've probably missed it. And they wait for it to come back. In fact, I had an American friend who lives in the village here who said, "What have you been doing to gold?" And he apparently wanted to buy some and he thought it would come back and it didn't.
Your fault.
It's not an investment. It's not an investment. I mean, the point is that it's not gold going up. It's the dollar going down. And if you can understand that, then you understand that gold is not an investment, it is safety. That's the whole point about it. It is getting out of risk and getting into safety. That's the whole point. So price is actually immaterial. I mean, unless you think suddenly there's been an improvement in the outlook for the dollar, in which case, sell gold, buy dollar. But personally, I don't see that. I see this huge, great credit bubble, which is deflating, and it's going to be punctured, and people are going to lose an awful lot of what they think is money. They will lose a lot of value. So I think that's the thing really to hoist on board, that it's the dollar going down. And yes, I mean, the reason I sort of really moved from head of research at Gold Money was because, I mean, that audience sort of pretty well understands the argument. I wanted to hit a wider audience. So we're looking at social media, we're looking at a Substack channel for really not much money, very little money, a Starbucks coffee once or twice a month. You can actually understand what these risks are, understand the difference between money and credit, what is money and what is credit. And I think it could be a means of saving an awful lot of your wealth if you do actually understand that. So that, if you like, is my mission. And, the series of broadcasts that we've done together has been a wonderful opportunity for me to try and get that message across.